The S&P 500 is backtesting this trend line, moving towards it. We're hitting the 78.6 Fibonacci. Moving average is still in a bearish arrangement. We'll likely see some type of pullback, again, either for a lower low to the 200 or a higher low. But we've had the rally. We've moved up to extremes. I told you down here when we were hitting 200 on the NASDAQ, S&P, and NASDAQ would likely get a rally to attempt to move back to the moving averages and try to fill the gaps. Did that. Now we've exceeded those levels. We got above the 50 period, and now we're testing the 200 and overthrowing it and horizontal resistance. Mark the Fibonacci's here, but let me show you the gaps with that. And again, it very well could be we see more distribution and we come back down, towards this area or beyond it, and this low, or even take this low out and move towards the 200 period moving average. Again, back up at the top, NASDAQ and S&P diverged. NASDAQ got a lower high at the 78.6 Fibonacci. The S&P likely had peaked because they were diverging. I talked about that at the time, and I told you NASDAQ already peaked. I told you that on the 11th it likely peaked. Going to rebound back up, and S&P probably moved to new high. That's exactly what happened. S&P formed this divergence, and it sold off. Next day, again, my signals turned bearish with that gap lower. We saw momentum signals turn bearish. A lot of signals started turning bearish immediately. We broke the 50, the green line. We went back, we bounced off the 200. We got rejection at the 50 again. And the cloud, after dropping below them, they became resistance, and we took out the 200. And then we got a rally back up, tried to get above the 50, and we stalled, overthrowing the 200. I told you that could happen over here before we got this rally right here. I told you we could come back and test this level and overthrow the 200 as we did over here. That's what's happening right now. I told you when we had this rally, before we reached this gap fill, I told you the day before that we were going to fill this gap and then likely turn down immediately, and that's exactly what happened. In 3 days, we saw the S&P drop 8% in 3 days, and now over the last 2 weeks, it's rebounded back up. Now, you were below the 50 period moving average. You tried to get above it here, and you moved to the 200 after the death cross, and it failed. And then you were below the 200, or the 50, below the 50, and then you attempted to get back above it, and momentum shifted. And again, we're talking about filling these gaps, and here, as we filled this gap, momentum shifted. I talked about my momentum signals turning back to bullish. The trend is still down right now, but it could be changing. We're trying to move now above this high right here. So could we get a higher low, a higher high, higher low now after having a series of lower highs and lower lows? Moving above this level here, that could be now changing. If it does, I'll be watching to see, do we set up an inverse head and shoulders pattern here? And maybe we just get a shallow retracement and then go on our way? Or do we get a deeper retracement, come back to some of these levels? Or we still try to come back and take out this low? That's still a possibility. Again, institutions are now selling the rallies. So again, will this one? Now again, we overthrew the 200 period, but you still have the 50 below it. We'll probably see an attempt to get a bullish cross, or a bullish cross followed by an immediate bearish if we get a big sell-off, or taking out of this low, or start getting a big sell-off immediately. It might be prevented from getting back above the 200, but you can still get above it and then cross back below it, or more of a shallow retracement, stay above it. But I'll be watching the gap fills. I'll be watching these Fibonacci retracements here on the S&P 60-minute chart. Now, the rising wedge, if we start breaking the cloud, we start breaking the momentum line, we start breaking the 20, which is right at the trend line there, here on the 60-minute chart, then again, you're going to see an attempted pullback. If we close below the 200, doors opened for a larger retracement, or even trying to take out the lows over here. So we'll be watching. Right here, we have the gap fill at 54.53. And you've had a series of gap and goes, gap and go, gap and go, gap and go, and down here, gap and go. And here we have this first gap right directly below. We have this gap at 54.53, okay? And then we have the 50 period below that, 38.2 Fibonacci retracement near the 50 period, or just the 50 periods right above it. If we get down to the 50% retracement to fill this gap right here, this gap, and the 50% retracement are very close to one another. The gap fill down here is at 53.45, and the 50% retracement is 53.40. Again, we're likely going to see some kind of retracement. Maybe we go a little higher than see it, but we're likely going to see some type of retracement for a higher low or a lower low for a bottoming process, and then we're going to likely go to new highs. Wild swings, 8% drop, rally back up over the last 2 weeks, recovering the 8% loss. We're still not at new highs, but we're probably going to see more of this violent, these violent swings up and down. So get used to it, because it's likely going to around as we're in a topping process. So if we go down to the gap here, this gap right here, that's at 52.01. We have another gap here that tried to fill, but it didn't quite do it. NASDAQ did fill that gap, 51.88. But so 5,200, the 53.50 area, the 54.50 area. So these are the levels I'm looking at. You've got the golden pocket here that is our 61.8 Fibonacci to the 78.6 Fibonacci here between 52.14 and 52.88. So if we move to fill this gap right here, and then we take that out and we come back down and we fill this gap right here at 53.45, so we fill the two gaps at the 53.45 and the 53 area, 53 area, the mid 54 area. If we move to fill those gaps and we come back down, then we'll be watching the 61.8 Fibonacci at 52.88 and our 78.6 Fibonacci at 52.44. Now again, this could change. If we do go higher, the Fibonacci levels will change, but currently this is where they're at right now. With that, we have negative diversions forming on the side and the MACD rolling over there with the little diversions developing on it as well. So we'll be watching to see if we start to break down, start to get a sell-off. We're going to, again, try to get a higher low or a lower low, find a bottom, and then rebound back up to a new high and fill this gap in all likelihood. I would expect that we're probably going to see distribution and then another run-up, followed by more distribution. So get used to it. You're going to see stuff like this where you get these dramatic drops and then these dramatic rebounds. It's going to be that way because we're in a topping process. I told you before, we had the Thursday rally with the retail sales now telling us, oh, we're not going to have a recession. We're going to have a recession. It's an excuse. We've had a run-up, big drop. Look at these drops. I mean, huge run-up, huge drop, huge run-up. I mean, these moves are exaggerated. Now, we have the criteria where the oscillators in positive territory could still roll over and get a higher low or a divergence. And again, you think that it's over, and we're just going to keep going. We're going to continue to see distribution into the rallies. Again, we had the rally on lighter volume, big sell-off, big rally back up, and everybody's even right here. Oh, it's over, and then boom, that 8% drop. And now we see this rally back up. And again, you're going to likely see the same thing with distribution, but then they're going to probably let it go to a new high. Again, masking what is really going on, and that is the institutions are selling into the rally. I expect more volatility, but I do expect some kind of bottoming process for a higher low or a lower low here, whichever way it plays out. But I do think the S&P is not done making new highs yet because of this gap and where it occurred, which it occurred right at the top. May or may not see the 50 get back above the 200. It may be prevented if we get a pretty violent move quickly. I mean, look at this. In 3 days, boom. Look at this. Over 2 weeks. I mean, you're getting these very powerful moves. Over here, when we gapped down, it was a gap and go. It was just boom, a powerful move back up. So you're getting these very, very powerful price fluctuations up and down and up and down. So again, I would expect we're going to see another one, and then we'll see if we establish a bottom. But I do think that we will establish a bottom, and then as we go towards OMC meeting in September, again, I think you will have a top, but won't realize that until after. I do expect a very ugly October. And if we get a pretty violent sell-off here, back to get a higher low or a lower low, again, I think we'll see this roll over and confirm one or the other in all likelihood. I got some really important shares to share with you, but please consider supporting the channel. Just follow the link directly below to take you to a secured site. You can donate any amount you want. Other than having sponsors, I just ask that you just do what you can to help out. But I need to hear from you in order to make it work. So if you could take a moment to do that, I would appreciate it. The link will take you to a secured site. You donate any amount you want. So please consider supporting the channel today. Some interesting charts to share with you, but I just want to share. Again, we're going back to these 200 period moving averages. This is NASDAQ right here. It's the futures 4-hour chart. But again, we've had the green. We had the big 3-day sell-off of nearly 11%, then the 2-week recovery. Again, we're likely going to come back down and get a Fibonacci retracement, probably move back below the 50 period moving average as it continues to rise. I see some type of bottoming process, but again, eventually move back up to the 20,400 area on the NASDAQ cash, and S&P will probably make a new high. So again, I'll show you this because again, after we peaked, I told you I thought we had a top right here. We bounced up to 50 and then dropped below it, held below it, held below it, tried to get above it here. It failed, had that big 11%, nearly 11% drop in 3 days. Then now we're in recovery, again, trying to go back above the gap fills, moving averages in the daily time frame. We're coming back to these 200 period moving averages. It's likely we're going to get a retracement or a test of this low. Get out a higher low to test it or a lower low, but I'll be watching to see if we start getting some red going into next week here with the intraday 4-hour chart here with NASDAQ. People are saying, oh, this is never going to happen, and it did. And now now that we've rallied up, people telling us, oh, it was never going to happen. Now, oh, it's over, it's over, it's over. Very, very emotional. I told you down here, again, we had dropped down to the 200 period moving average on NASDAQ. I told you again, watch the gaps, watch the moving averages on the daily chart, 50 period moving average. Rallied up and we started getting above those levels. Momentum is shifting back up. Below the 50 period, we dropped below the 50 period, the green line. Okay, tried to get above it here, and then it failed. We at that point, we went back up to the 200 and overthrew it on the S&P. But on the 60-minute chart here, again, now we got back above the 50, and now we're rallying back up to the 200. Okay, so we're probably going to get rejection around the 200, and the 200 is now crossing the 400 period moving average. There's more work to be done. You got a rising wedge. You got this other gap fill up here, but eventually we're going to make our way up to this level right now. The bulls think, oh, we're going to do that now. We're not going to do that now. You're going to see more distribution. Whether we go a little higher and get the distribution and see that happen, or whether we do it immediately here on NASDAQ. But we are seeing, again, these levels taken out. So we're going slightly higher. Maybe we go a little higher, but again, the downtrend now be changing, and again, you got a shot at an ABC move if you end up getting a higher low. If this is a 5-leg push lower, it may not be done yet, but again, it is very possible because we got the bigger move up that a 5-leg push is now done. Now I'm looking for an ABC counter trend to go back up and fill the gap at 20,400 up here. Again, we're now seeing momentum turn back into positive territory. You got above the 200. The 50 is still below it. The criteria is not being met. So again, we're probably going to go back to the 50 for a test. We're probably going to go back to the 200. And again, this is going to keep rising, and it may try to get a bullish cross, but we're probably going to drop below the 200. We'll see if we get a pretty violent sell-off. Does that prevent a bullish cross? It does. But I think you're going to see a bottoming process and then eventually head up here. But I do believe the top is in back over here. As I've said, I don't think the S&P is topped. I think you're going to see a bottoming process for a higher low or a lower low, and then I think eventually, again, go back up. But you got a shot of an ABC structure going into the Fed meeting now with this bigger rally that we had. And because we got a bigger rally, the odds start increasing now that the next sell-off you're going to get a higher low. But you're probably going to see the distribution here, and then we'll be watching, does this oscillator go into the negative region, and does it confirm a higher low or a lower low? We never did quite reach the trend line that you'll be seeing in this video, but hit the 200 period moving average here. So again, we'll be looking for a bottoming process and then eventually a test of this level. Told you we had momentum turning at extremes here and starting to turn back up. So again, I expected a rally to fill these gaps. We've now exceeded that, and I told you watch the moving averages, rallying into the moving averages. They were declining. They're still in a bearish arrangement, but the 10 is turning up now, and the 20 is starting to flatten out. So again, we're probably going to move back to the 10. We're probably going to move back towards, beyond the 50 period on the 60-minute chart. And again, try to form some type of bottom at the Fibonacci retracement. Go a little higher. We have this gap here at 19,754. You're right at the 50 period. You're right at the 61 point of Fibonacci, moving up here at this horizontal resistance and moving just slightly above it, which means, again, I think you're probably going to see some kind of soft. And because we got a bigger rally filling this gap, and then now moving beyond that to test our 50 period and our 61 point of Fibonacci, it's a pretty good shot that you're going to establish a higher low. No guarantee, good shot. That changes in that we can now get a higher high and a higher low, but still go back up again, maybe get a deeper retracement, maybe even come back to the 200 as it's rising, and eventually, again, as we go into the Fed pivot, come back up and fill this gap up here. But I don't think you're going to move to a new high. You've got a trend line directly above that is major resistance. My guess is NASDAQ has already peaked, and it'll probably diverge with the S&P 500 as it did at the 2022 top. Have to come back up here and reach extremes with momentum. It could roll over down here when we were getting corrections and sell-offs. It turned back up when that was done and resumed higher. Same thing here. If it rolls back over, if momentum rolls back over, it can resume and we can go back down and test the 10 period. Maybe the 10 gets above the 20 as we pull back and test it. We'll see what happens. But again, we're likely going to see a bottoming process here and then go back up and test this level and see a larger topping process develop. You had a shot at a head and shoulders. Again, I told you I still don't think that's going to play out. I think it's going to end up that we're going to come down here and end up forming this double top pattern, very much like Bitcoin did when it was topping. So far, since March, has now been able to move to new highs, which is diverging with the S&P, which is a warning sign for the stock market and for Bitcoin. As momentum is at extremes, we've come up here. And again, here's the retracements. Again, right here, had this 15.75% drop. Okay, and again, I told you up here, I thought we had topped. Told you right there after the peak that I thought the market had topped. Still think that. But here, again, I told you we were going to come up right here to gap resistance. We had right here this head and shoulders pattern. I talked about that. This little miniature head and shoulders. I didn't draw that very straight. Let me fix that. This head and shoulders. And I told you, this was the head, this was the right shoulder, and we are likely going to back test that, and this gap resistance area as well is where we're going to stall and then turn back down. I told you I thought we'd go to a new low on NASDAQ towards the 200. We did hit the 200. I thought we'd end up going a little bit lower if we just went back up and filled the gaps. We exceeded the gap fills and moved up to the 50 period in the daily time frame, our 61 point of Fibonacci, and this level right here, testing our 200 period in the 60-minute time frame. So again, good shot that this is a bottom here. Let's see if we get a lower high, a higher low, or and have this level hold up, or a lower low. And again, we able to keep going, so you're probably going to get the pullback right now. Now I've marked the Fibonacci retracements and showed the gap fills. Again, gapping above the 200, just like the S&P. We're now exceeding this level, so you got a good shot. You're going to get a higher low. But again, we're being told, no, it's just going to keep going. Just like they said over here, oh, no, it's just going to keep going. Like over here, oh, it's over, and not. Over here, it's going to keep going. It's going to just keep going, not. And over here, they're telling us, oh, it's just going to keep going. Probably not. And then again, eventually you're going to make your way back up to fill the gap at 20,400. Here I'm watching the gaps. You've got three of the gaps. Now, S&P has a gap over here that was not filled at the I think it was 51.88. NASDAQ already filled it. So S&P has four gaps. NASDAQ has three. The gap fill here, right here, 19,000, just above 19,000. The gap right here, just above 18,500, almost 18,550. And again, the gap down here filling is at 17,870. Now, I put the Fibonacci's, and the Fibonacci's can change if we go a little bit higher. But again, you do have the gap fill. You do have the gap fill just a little bit higher at 19,000 and some change there. 18,700 area and some change. But again, if we just turn immediately or go just a little tiny bit higher and turn. Again, these are the levels I'll be watching, but the Fibonacci's could change if we do go a little bit higher. Got these negative divergences that have now formed. Now, if we come down to the 50% retracement, that's very close to this 18,550 area. Beyond it, again, is this trend line right here that we could back test and near our 61.8 Fibonacci. If we move beyond these levels and get just a violent move down, again, like over here or over here, you know, and the violent moves up and down that we're seeing, if we get a violent move down, we can go into the 78.6 Fibonacci. I didn't mark it here. I forgot to do it. I'll do it next update, show you the chart. But again, closer towards this area here is the 78.6 Fibonacci. So I'll be watching these gaps. And again, do we go into the golden pocket, which would likely take us closer to fill this gap? So we'll be watching. Again, we could, again, come back towards this low and come back to fill this gap even. And again, move into 15,000 range again and push it back up. And again, you could be seeing a large ABC structure that will end up taking us up to test the high, fill this gap, and again, get a large counter trend, move towards the Fed pivot, large counter trend as we move towards the Fed pivot on September 18th, which is what I believe is going to happen. I believe the Fed will lower rates. I think we will complete a topping process either just before it or with it or right after it. Historically, that has been the case. If you think the market is going to just keep crashing down below the levels of support that I'm talking about right now, that's not going to happen. You're in a topping process. Before the big crash and bear market, you got to finish the topping process, which is what I've been saying as we rallied up into these levels. I kept telling you my signals are still bullish, but we're going up into these trend lines. We ended up doing same thing here. I'm telling you, look, I'm looking for a bottoming process, levels of support I've been talking about. And again, whether we take this low out and horizontal support at 17,000 or whether now we get a higher low and this level holds, I'm looking for a bottoming process, but you could see a big retracement and then another big move back up. I think it's likely that, again, with making a new slightly higher high here, that you are probably, you probably have a pretty good chance you're going to get a higher low now. And if so, then you're moving and getting an ABC structure in all likelihood that will take us eventually back up to 20,400 for a test, probably make a lower high for NASDAQ. Watch the video all the way through. I'll be showing you some important levels on the daily chart, intraday charts, just looking at how often has happened, the recovery that's taken place, and where we might go with the Fibonacci's. Eventually, the gap fills and the resistance levels. I think S&P will make a new high. I think NASDAQ will not. I think they're both going to pull back. Also think that dip is going to be bought, and eventually, again, we're going to move above whatever peak is made here, whether it's done or not, and again, eventually go even higher, 20,400. And I told you back over here to be watching for green bars. We'll probably attempt to go back and fill these gaps and test the declining moving averages, but you'll probably see this turn back down, the oscillator turn back down, and eventually turn back to red. Well, we've seen that happen. We've seen this rally, but you're still in negative territory. Very good chance going into next week we could start turning back down and seeing red bars, or maybe turn positive and then see that happen and see the red bars show up. But again, Bitcoin started getting green. It went up to the center line here and it turned back down. Now it's getting red. Bitcoin lost the 10-period moving average. Now it's rallying back up trying to test it, but lost it, okay? It turned off the 50. NASDAQ's at the 50. It turned off after back testing the trend line and overthrowing it. NASDAQ just did that. So again, I think you're going to see that happen here. And then again, we'll either confirm a higher low or a lower low. And again, it's possible here with S&P, we do move to a lower low to hit the 200-period moving average and take out this low. Again, I think the odds are increasing now that you're going to establish a higher low, probably take out the 10-period moving average here, as Bitcoin has done. And again, I think you'll come back here. We could sell off into Powell's speech or after Powell's speech with Jackson Hole come Friday. And a number of things can rattle the market. Let's talk now about monkeypox again, tensions in the Middle East, still recession concerns, and again, the emotions. Oh, we're going to have a recession. Oh, no, we're not. Yes, we are. No, we're not. I mean, you could get this, these emotions. That is that the institutions are selling into the rally. And the hoax is we're not going to have a recession. We're going to have this soft landing out of the Fed, this new bull market into 2027. People continue to say that. And after it's realized, and I get all these people that saying this stuff, Fed should have listened to me. Should have cut sooner, and again, because we're going to have a recession. Again, I'll be watching to see if we get red going into early next week or not here, and to see if the MACD rolls over. Again, we go a little higher and we see that happen. Maybe we turn immediately. There's a gap fill on NASDAQ directly overhead, but both NASDAQ and S&P are hitting Fibonacci retracements. Here on the S&P daily right here, you're hitting the 78.6 Fibonacci. So I would expect we're going to drop back below the moving averages and take out the 10, and then we'll see what happens. That's why I'm showing you the Fibonacci retracements on those 60-minute charts. Same thing with NASDAQ 100. Again, I told you over here to be watching for green bars that we're going to end up turning back up. Watch the moving averages, watch the gap fills. We've exceeded those levels. We exceeded the 20, and now we're back up at the 50. We've moved to the 61.8 fib. Again, increasing the odds that likely we have a bottom here, and we're going to get a higher low. You hit that 200, which would still give us a higher low, but I think you're going to drop below that 10-period moving average, and that's why I'm showing you the Fibonacci retracements. Let's see the stochastic end up trying to roll back over, get this pullback, and eventually make our way back on NASDAQ to fill the gap way back up here. After I told you we had a top over here, we saw the reversal, the momentum signal shift with that lower high. We're again in a topping process. We're not going to just keep pushing straight down. We've dropped again 15.75% from the 3-day drop here, nearly 11%. Now we've rebounded back up. You're going to likely see more distribution, maybe a little higher in distribution, or maybe immediately. But again, you're going to get more distribution, and then you're going to get another push up, and then you're going to get more distribution, leading up to getting a top on the S&P and likely September surrounding the Fed, or on into early October, after the Fed pivot one or the other. Just before rounding that Fed pivot, you're going to see a market top develop. Going to get these wild swings up and down, so get used to it. It's going to happen. Expect more selling, and then expect a big rally after the selling. But we're probably going to come back and test as low, as I keep saying. It's amazing. Over here, they didn't believe it can go down. Over here, they didn't believe it could go back up. Oh, we're all going to die. And then it did go back up. And it recovered that three-day loss, nearly 11%. And it did it over 2 weeks. Now they don't believe again we can go down. And again, we're up. When we get these big rallies, powerful rallies, they don't believe we can go down. When we go down, they don't believe we can go back up. But again, this is still negative, suggesting that there's more work to be done. So you're probably going to see red and a higher low or divergence develop. And then again, probably an even bigger rally than this one that we just had here. That rally, you're going to see a bigger sell-off than the one we had right here. We're in a topping process. I can't stress that enough. Think we're going to go straight down? We're not. Go down, we're going to get powerful rallies back up, and the rallies are going to be sold. See this over and over again as we usher in a bear market. Now here, I'll be watching to see, we got momentum shifting back. We got back above the 10. Do we drop back below the 10? Does this signal turn back to bearish? Drop below this level, but then still close above it. Does the cloud remain green? I'll be watching to see what happens here with that. I do expect that we're going to volatility, bottom out, and then get a bigger rally than what we've already seen. I told you back when we were rising towards these trend lines that Bitcoin had bottomed July 5th. There's a good chance we see a top in the market because they had a negative correlation. I told you to be watching these trend lines as we are rallying towards them in late June and then in early July over through this level with our peak on July 10th, that week of July 10th. And I thought we had a top in there on July 11th. I still think that. A topping process. Don't lose sight of the bigger picture. Dramatic push down. Now we're getting exaggerated moves up and down. We're going to get another push down. Eventually another push back up. Eventually, I think you're coming back up here to 20,400 to fill the gap, but I think you're going to get a lower high. If I'm wrong about that, we're going to go slam into that trend line again. But I think the NASDAQ has peaked, and oftentimes the NASDAQ will diverge with the S&P 500. S&P got the gap at the very top. I think it will go make a new high. NASDAQ will make a lower high. we've to the bigger picture. Again, a topping process is forming. Eventually, you're going to 20,400. I think you'll bottom here with the higher low or lower low. So I told you, again, I thought we'd probably come into the 17,000 area to this horizontal support of the trend line, and we came just above the trend line. NASDAQ's come up to the 50-period moving average, just like Bitcoin did. It's come up to the cloud and our 61.8 Fibonacci of this decline. Again, nothing goes straight down. We dropped 15.75%. Right here in 3 days, we dropped nearly 11% from that lower high that's set up. For the last 2 weeks, we've rebounded back up, getting a Fibonacci retracement. Moving averages are still in a bearish arrangement for the NASDAQ. The 10 still below the 20. Both of them still below the 50, the green line there. Again, it's highly likely we're coming back to test this level. The question is, are we going to take out the 200 here and try to move to a new low, hitting this low 17,000 area, and establish a higher low? But it's highly probable that we are going to get a test of this level and pull back, whether a higher low or a lower low. We're hitting these Fibonacci's. I'll show you the Fibonacci retracements, and when I'll talk about these gaps. Remember, this only took 3 days. This took 2 weeks. We're getting these exaggerated moves up and down. The up on the lighter volume, then the distribution volume, and then again up. Why is that happening? Because the bigs, the big institutional guns, the institutions are selling into the rally, and they have to disguise what they're doing. They have to mask it, and they've got to, and again, NASDAQ gets this big drop, okay, just over 3 weeks. It gets a big drop all over social media. We were told that wasn't going to happen. AI bubble is popping. Institutions have huge positions, so they got to let it run back up. They'll probably get more distribution, and then they'll probably let it run back up some more, and then more distribution. I think if that happens, if we get a higher low scenario, you can get an ABC move here. If this is a 5-leg push lower, again, I believe NASDAQ has topped, and if this is a 5-leg push lower, then this could be an A, a B, a C structure. Again, eventually, you're coming back up here to 20,400 to fill this gap. S&P will likely move to a new high and diverge with NASDAQ. That is likely going to be going into the Fed September FOMC meeting. It's going to pivot. Market is going to form a top ahead of that, with that, or just after that. 2007, the Fed pivot, it peaked 2.5 weeks, 3 weeks later or so. 2000, we got the Fed pivot. The market had already dropped. It already peaked, had dropped nearly 20% or so, and it rebounded with the Fed pivot, get a lower high, and then got a lower high, and then collapsed. The Fed pivot is bearish, meaning the Fed pivot, meaning they lower rates. If that happens, you're going to have this topping process, which I've been talking about. I think the market's just going to start collapsing right now, get powerful rallies back up. You're not hearing what I'm saying. I'm saying we are in a topping process that will lead to a collapse. I'm going to get these big moves up, these big moves down in the topping process, big move up, probably another big move down, and then probably another big move up. And again, create this illusion that the market is actually going higher when it's not with the NASDAQ. S&P will probably make a new high. NASDAQ has probably already peaked and begun the bear market. If this is a 5-leg push lower, then again, it's likely that we have an A, a B, or even go a little higher, an A, a B, and then go up and get a C. Very, very possible. Now again, the moving averages are still in a bearish arrangement on the 60-minute chart, on the daily chart, so we're likely going to pull back to the 10, probably take it out, get a higher low, or maybe a lower low. That's still possible. You'll see a bottoming process, but then I think you're going to come up in the larger topping process. I think you'll probably overthrow the 78.6 Fibonacci and go to this gap fill right here at 20,398 or 20,400 rounding up. I think you'll come up to just under this level, and I think you'll see a peak, and I think that's going to be going into the Fed meeting. Now, again, pull back. The same thing with the S&P 500. You've got, again, we're going up to the 78.6 Fibonacci. We're going up to horizontal resistance right here. Again, you're likely going to get a pullback. Again, I don't think the S&P has topped. I think you're going to go back and fill this gap, but I don't think you're going to likely do it now. I think you're going to get this big sell-off. I think while NASDAQ may have a 5-leg push lower or about to get one, I think S&P is likely completed an ABC move here. I think you're going to pull back and then you're going to go higher and eventually make a new high, likelihood to complete the topping process. Whether it's a shallow retracement or a deep retracement, again, I think you're going to likely move back towards these 10-period moving averages in all likelihood and get that 10 eventually back above the 20 as we're pulling back into those moving averages or deeper into the Fibonacci retracements and the gap fills that I'll show you in a moment on the 60-minute chart. If we end up moving to a new low, watch the 200-period moving average. Not reach that. NASDAQ did. I still think S&P will eventually fill this gap and move to a new high. So again, we'll be watching. But right here, again, the moving averages are in a bearish position still. So it's the same way on the 60-minute chart. That's likely going to change. Could change, but we're probably going to get a big pullback. And again, nobody expected this 3-day drop of 8% to happen on S&P or the nearly 11% drop on NASDAQ, but it dropped sharply. Sharp drops that we've been seeing on the NASDAQ pretty much all the way down. Now you get this recovery. We're likely going to have more volatility as we're hitting these Fibonacci retracements in all likelihood. I see some kind of pullback or retest of this low right here. And again, if it is more distribution, it could be violent and then a move back up to a new high. But again, very, very violent moves up and down. Again, a 3-day drop, sharp drop, and then a big rebound the previous week, and then another big rebound this past week, creating wild price fluctuations. That is what happens in a topping process.